Sullivan. I'm a former IRS agent. I was a teaching instructor there. I was a revenue officer. And I want to talk to you today about the trust fund penalty. Many people are shocked and surprised that they got a trust fund penalty set up. And I was a person at IRS, I know, boo hiss, that used to set these penalties up. So I want to explain them to you and explain what the purpose is. When you file a 941 payroll tax, the government, you as a company, take withholding and Social Security out of someone's check. So at the end of the year, when they go to file their tax return, that withholding money that you took out of their check, the government gives them that money back for a refund, bar none, whether you're in business or out of business. Well, the problem is many companies cannot pay that payroll tax. I've worked, thousands of IRS payroll taxes. My heart goes out to you people who have those and are in this situation. Many of you are actually surprised by the trust fund penalty itself to say, oh my God, what did I get into? Yeah, but if you don't pay those payroll taxes, the government under section 6672 can assert that penalty. It's not really a penalty per se, it's a transference more. Many people say, well, it's a penalty, it shouldn't be, but they're transferring the withholding that in the Social Security you should have paid the government. They transfer that to you, and now you're individually responsible for that penalty. So IRS is going to go through a process of determining who is responsible for this to paying that. And IRS goes through kind of great lengths to find this out. I used to do these investigations. IRS is going to go ahead and take a 4180 interview. You should download the 4180. As a revenue officer, it didn't take long to determine who's responsible. You basically go to find out who wrote the checks, who signed the checks, who had control, who was on corporate resolutions. A lot of those things just boom, it's you know who's. But there's some cases where a secretary may have been set up, or other people who just wrote a few checks were set up. It's unfair to those people, but IRS can impose those penalties against them or the transference. So basically, what is it? Well, IRS takes the 941 that you file and takes all the withholding that should have gone into the federal government and 1/2 of the Social Security only. Why 1/2? Because that's the money you held in trust. You held that money out from the employees' checks. That money is considered sacred. It's considered trust fund. It's considered holy ground. That's the money IRS is looking for. They will do an investigation. I would have done that investigation. And there's reasonable cost to fight these penalties or these transferences that you may have reasonable cause to fight them. That's kind of what I do today. Since I set the penalties up, I know how to fight those. Anyway, that's what the trust fund penalty is all about. The 4180 interview, should download it. It's about 5 or 6 pages. Gee, they've expanded that interview. But if I was the RO, I usually go right to the checks, found out who signed the checks. And sometimes you only have to file one, or sign one, sign 3. IRS can still go after you. So there are plenty of defenses. Generally, if it's a 1 or 2 person company and you signed the checks, ran the company, did everything with the company, you're pretty much going to get set up for those penalties, and there's not much of defense. I'm being honest with you. Don't call all around to try to have someone fight the penalty and win. It's just not going to happen. Tax court is going to uphold those decisions. But if you need someone who's serious to go ahead and you have a case, I'm the person to win that case. Thank you very much. Give me a subscription.